All right, there we go. Okay, how are you guys doing? Very good afternoon, good evening to you guys. Welcome to today's live market outlook, geometric market outlook. Today is the 20th of April, 2017. Now, hope you guys are doing well with your trades as well. I know there have been quite a number of movements in the market. Just before we start, I'll just go over the disclaimer as usual. This session here is powered by Blackwell Global and presented to you by FX Geometry. So this is the risk warning here. Forex and CFDs are leverage products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risks involved and take into account your level of experience. Seek independent advice if necessary. Okay, so there we go. All right, so good afternoon to you, Mr. Thiru. Hope you guys are well, and we shall then start. If you guys have got any questions, just have that written down. We're just going to go through some of the patterns, especially the major pairs, and then we go on to some crosses as well as usual. But I just want to share with you guys on some, what do you call that, relevant area to pay attention on, okay, especially with pairs that I usually pick out pairs, meaning currency pairs that dependent on the movement of the market. Okay, like for example, like today, I mean, there are a lot of interest. If you guys are on the Telegram group, the GTI Telegram group, I've already shared that, telling you that this week is very much an interest by investors on carry trading. So carry trading does actually involve pairs like AUD, JPY, all the pairs that involve a high interest rate currency like AUD, Euro, USD, GBP. All these are high interest rate ones, and then you pair them up or you match them with a low or very low interest rate currencies like the JPY, which is the lowest one. So you've got a lot of interest by investors onto currencies this week, especially starting from today, on currencies or currency pairs like AUD JPY, AUD USD, even GBP, Euro JPY, because JPY has got a negative interest rate. So you could say that that's one of the currencies that are the lowest, having the lowest interest rate. So if you combine them together, you get a number of pairs that could be of interest by investors, and this is being reported by in the bank reports as well that I have daily, and that's been an interest by investors as of today. Okay, so they are gearing up onto the buy. Now we are talking about but when they do carry trading, they're actually buying these currency pairs, and this is usually how they benefit onto a carry trade. That means they are benefiting from a buy order, buying the currency that has got a higher interest rate versus the one that has got the lower interest rate. Okay, so just to give you a bit of an idea, the top 10 today does actually involve a lot of NZD type currencies. The top 5 really out of the top 10, we have got a lot of interest by investors trading the NZD JPY, the NZD USD, NZD CAD, and NZD CHF. Okay, I'll share with you a little bit more about the trend as well. The top 3 that we've seen have been moving a lot to the upside today as of trend, following major, I would say, the main tools like the heat maps and various other type of tools. They're actually showing us that the GBP, the AUD, and the CHF is more to the upside. So these pairs, the GBP, AUD, as you know, GBP, it's been driven by what Theresa May have actually announced at the speech, and then AUD is very much a commodity currencies, together with CHF is considered a safe haven type currency when there's a lot of geopolitical risk going around. And then you're seeing the 3 weakest currencies would actually include the yen, the dollar, as well as the CAD at this moment of time due to the oil prices as well. Okay, so these are more on the trend side of things, and we want to also look into other possible areas, possible pairs or instruments that may actually hint us some opportunities based on geometric patterns. So let's get on to the first currencies as you always, which is the Euro USD on the 1 hour chart. I mean, quite a number of traders are actually trading this pair, being the major pair as well. So we want to start always at the with the 1 hour chart. Now, as for me, I usually concentrate or focus on 7 pairs. Okay, the 7 pairs that I like looking at. We'll start off with the first 5 pairs first, which is the Euro USD. Usually they make up the major pairs. So the Euro USD, the GBP USD, the AUD USD, the NZD USD, and the Euro JPY. So these 5 pairs usually they move together. So they usually move the same direction. Don't take my word for it, thinking that it'll always happen. This usually can actually happen during a period of a couple of months, maybe longer, maybe less. So you can always have all these 5 shown on your chart, make a bit of a comparison, use a template that uses like the window kind of template so that you get an idea. So these 5 usually they move in the same direction. Okay, and then we've got the other 2 pairs that actually move opposite direction, which is the USD CAD and the USD CHF. So I usually pair them all up. I mean, have a group of these 5 pairs and look at how they move, and they would actually then give you an idea. So I've got my Euro USD here, GBP USD, AUD USD, NZD USD, as well as Euro JPY. So these 5 usually move in sort of the same kind of direction, and if they don't seem to be very clear in the same direction, that means the market is not really clear with the trend as well. Okay, for these pairs. Now, if they are clear, then you usually have got a market that is moving quite fast. So if you've got, let's say, Euro USD at this moment of time, if we're looking at a 1 hour chart, let's go back to basics and look into the trend side of things. And I usually apply, for those who are new or have just joined us for the first time today, then you've got the 50, the 100, and 200 exponential moving averages. As you can see, and you guys already know this using clock angle as well, you can see that angle there, as well as how the candlesticks are moving. They're moving all above the 3 moving averages. As we use a cluster of 3 time frames, if you go onto the 4 hour chart and the daily chart, you could see that it's almost it mirrors between 1 hour and 4 hour at this moment of time, showing us a little bit of a uptrend type move. Okay, and if you look into the daily chart, it's sort of giving us a little bit of uncertainty at this moment of time, especially due to how the candle's moving. This candle here has got a wick that touches it, so you've got no candles that have moved above all 3 lines. So at this stage, we want to ignore the daily chart at this stage and move 4 hour, 1 hour, and maybe below, and look into the 30 minutes chart as well and look at what's going on. You've got a bit of a correction going on at this moment of time, so that is what's telling you at the 30 minutes as well as the 15 minutes, you've got a correction that's happening. Okay, so if we go back to, let's say if we've gone to the 5-minute chart, and we can see that that's where the uncertainty still has as of now. Okay, we've got a little bit of uncertainty with candles, in between all 3 lines. It's not a good sign of a clear trend at this moment of time on the now type time frame, which is shortest period 5-minute chart, let's say. Okay, so if we go on to the 15-minute chart, we can see that it's building to the upside, even though it's coming downwards. But from a 5 minutes, it's in here, and then if you go on to the 15 minutes, it's sort of popped out. Okay, it's gone above all 3 lines. Okay, even though you've got a bit of a correction. Now, if you go into the 30 minutes, you can see that it's coming down, but it sort of trended or found support area roughly a little bit higher now, a little higher than these 3 lines. And then as you go into the 1 hour chart, even higher. So you've got a bit of a correction that has been confirmed on the lower time frame, but then it has moved higher and higher. So you've got more bias to the upside. So you've got a hint to the upside or a bullishness at this moment of time, despite the fact you're looking at a bit of a downward type trend. As you go into the 4 hour chart, it gives you that very clear indication that you probably have got some movement to the upside expected. Okay, now if you're starting from here and you're looking at A here, B, and then C, then you've got an indication of how much it has actually moved. Okay, so here, for example, if I do that from here and all the way up here, you can see that it's supposed to be around here, let's say, but it found support and it go higher. So it's giving us a bit of a hint that you've got more strength to the upside for the Euro USD in general. But I would like to avoid the daily chart at this moment. It's not really that clear because it's in between all three lines. So when you go into the weekly chart as well as the monthly chart, you've got the very long term to be giving us the hint to the downside, which is bearishness, lots of bearishness expected. Okay, we've got elections going on in the Eurozone, and that actually is giving us a little bit of a unpredictability or a bit of a threat or risk in that area revolving the euro this moment of time. But overall, as you can see, if you want to look at patterns itself, I mean, starting at a 1 hour chart, what I could see is a potential, as generically, we've got a potential cup type pattern here. Okay, it's quite rounded visually, it's rounded, so it's got some potential for it to come and correct itself, make an ABCD until the mouth area here potentially. The reason why I've taken that area here is because you've got a bit of sideway going on here, and that is usually a potential mouth type area there. So what I'm saying is that you've got a potential to the upside following the cup and handle pattern. If you type in the cup and handle pattern onto Google, you could see that this is how it's actually moving. But we usually apply the principles of geometric patterns based on the ABCD type pattern, which does actually move inside this cup area. So you will get lots of ABCD moving to the upside in a cup and handle type pattern. Okay, so let me just clear this one here to show you what could potentially happen based on a cup and handle type pattern. So here, if we go on and erase this one here, and I'll just draw that again. Usually the cup and handle pattern would actually look something like this, aiming it to the upside, aiming it to the upside, close to around here, let's say that's your cup, the mouth of the cup. And what usually does happen from there, I mean, based on the principles of cup and handle pattern, in theory, is a bit of a, how do you call that, a correction to come downwards, and that fall usually is about 50% of that move. So if you draw you pick a Fibonacci from point A, let's say here, and you drag your Fibonacci all the way once prices have reached here, and then you look at the 50%. So prices usually, in theory, based on cup and handle pattern, would land the 50%. But after it has actually appreciated and reached the mouth of the cup area and make that rebound downwards to the 50%, and then it will start to make that bounce again. And from then on, once it does or manages to actually go through the mouth of the cup, once it goes up, then that upward move would be highly significant, meaning that it could most probably be the length of this number of pips in length would be from the mouth of the cup right down to the base of the cup. Okay, so that's a potential. This is a probability. It's not an assurance. It's not a certainty that this would happen. This is just based on what's going on following prices now and how it has actually kicked off with lots of bullishness, and you've got higher highs here as well, and you've got higher lows as well. Okay, so all these circles here, for example, as you can see, the flow is to the upside, and then you've got a higher high again. Okay, so if you connect the dots here, for example, you connect the dot, you could see that the flow is to the upside. Okay, so that upside kind of flow could be easily mirror the clock angle as well to understand what's the strength of the trend for the Euro USD. And as you can see, if you do that, as in zoom out totally, you could see that that angle there, let's say from the base right to this area here, it's quite a steep angle, meaning that it's giving you the hint that the trend most probably could pick up because of the angle, the clock angle of the trend itself is giving you the that hint that bulls may actually be ruling the game again, despite the fact that it's doing a bit of a correction. So it is looking for a support area, okay, around anyway around prices that have actually respected a zone previously. So what you could do then is move to one. If you're looking at 1 hour chart, you could easily go up to the 4-hour chart and start looking at your support resistance. So your support resistance zone is always best to be drawn at 1 hour time, at the one step up of the time frame that you're looking at. So if you're looking at 1 hour chart, one time frame up would be a 4-hour chart. So the 4-hour chart would be a good one to draw your support resistance line, and 2 time frames up would be the best to look into the trend. So if I am looking at 1 hour chart, I will be drawing a support resistance on 1 time frame up, which is the 4-hour chart, and I'll be looking at the confirmation of trend at the 2 time frame up, which would then end up at the daily chart. Okay, so here the daily chart, as I have mentioned earlier on, is not giving you that clear hint because you've got candles in between all 3 lines, so no clear hint on the trend as yet. Okay, because we want to be taking care of the risk element side of things, so that is really important, and that usually gives us a clearer picture if we look at the trend from a cluster of 3 time frames. Okay, so if it's the 1 hour, is a 1 hour, 4-hour, and daily, they should all match to show you that the candles are above all 3 lines or under all 3 lines, and also the clock angle. So here, if I've ignored that daily chart, I went back to 30 minutes, for example, and 30 minutes show me that, you know, there may be that may be a correction because you're looking at all the support, and then you are looking at still candles to the upside, as we have actually seen earlier on. And then when we look at the bigger picture, this is where we have seen the potential of a candle or of a cup and handle type pattern, giving us a little bit more room to the upside. Okay, so this is basically how it looks like on the Euro USD on the 4-hour chart. If we go onto the 1-hour chart, and we could see that, I mean, some of you guys may be looking at an A here, and then a B here, and then a C, and then a D, which is not wrong at all, but it would be a higher in probability if your C point, as I've mentioned, to be touching or finding support at any one of the moving averages here, which is the 50, either the 50 exponential moving average or the 100 or the 200. Okay, so here, for example, if you're finding that correction to the downside, let's say, and then it manages to touch either one of the line, then that would make it a good C point. Then you can have that as A, that's your B, and then your C, and then you aim upwards as an ABCD pattern, and then you convert that into a geometric pattern to find that. At this moment of time, I wouldn't take that as an ABCD, as it offers me a little lower in probability for the Euro USD. Now, apart from that, if we're looking into the price action itself, we're looking at the price as of now. Euro USD is trading at the 1.0743. Now, 1.0743 is just too close to the 1.0750 psychological level. So it's always best to wait and monitor the price action by looking at whether or not the prices have actually appreciated further above the psychological level of 50 or much under the psychological level of 50. So that's a good play of the market by the bulls or the bears once they have actually gone above the psychological level or under the psychological level. At this moment of time, it's sort of trapped in between this psychological levels 0750 area. Okay, you need to show me more bearishness if it goes under 50, more bullishness if it goes above 50. Okay, and usually traders, they look into a number of pips of about 10 pips above to show you that bullish action, and 10 pips under the 50 to show you that bearish action. Okay, apart from looking to the right at the price, you want to also look to the left for other significant areas. So now prices are coming downwards, correct? You want to also look to the left and see whether or not they are threat of support previously. So you go onto your 4-hour chart and you drag that and look at areas that have actually found support, and you've got a little bit there, you've got some that's not really that clear, but you've got more play of bearishness by resistance level as opposed to bullish areas. Okay, so if I get rid of all that and we will start to draw a support resistance zone, it will be a clearer picture. Now here, as you can see, prices now trading at 1.0745, let's say. It's actually really close to a previous fall of price at this angle here. Okay, at this peak. So that peak there where price has actually found a resistance in the past. This is sometime in, let's say, 2017, still in February, a few months back. It's February 2017. Prices have actually fall at this point all the way down here. It's quite a significant fall. So you want to respect that level because the prices may actually respect that level there. So what we can then do is draw a zone based on the highest, that is the highest body that you can see, and then the highest wick you can see. So that would give you a bit of a resistance to watch out for between 1.0746 to 1.074, sorry, 1.0754 to 1.0746 area. So that would give you a bit of a hint. Prices is just flirting around that area at this moment of time. So if you want to look at more bullishness, then you would need to wait for prices to go pierce through, for current price to pierce through this and go above this price. So as you can see, as you draw that one there, it sort of mirror this one here as well. These are also falls. Okay, so let's just drag that a little bit more, and then you can see that there are significant falls from that area. We have not seen at this moment of time some significant support at this area. It's more significant falls. So this is where we have looked at previously, but then now, as if at all prices goes further downwards, then you've got this area as well to watch out for, because you have got the lowest body here and then the lowest wick here, and these are all areas to watch out for, because this is a significant support area here. That's your significant resistance area there. Okay, so here you go. Right, so what you can then do is to mark that differently and have this zone here marks the significant resistance area. Okay, and this area here marks a significant support area. So as you can see, it's just trapped at this moment at this zone. I know it's quite large here, 0754, 0706. We've got 40 plus, almost 50 pips type range area. So you would need prices to go above to give you more bullish momentum, or under this entire zone to give you that bearish momentum. So at this stage, it's just not really a clear area. Okay, so this is just based on the Euro USD. So for those who asked, whether it's an up or a down, I wouldn't actually prefer to answer that question straight away, because it's best for us to do a bit of a market analysis as opposed to a direct guess of what will happen, because we'll never know. This is a game of probability, and this is where we need to measure the probability and the risk in order for us to understand how to actually analyze and trade the market. Okay, and become an informed trader. That's what you need to be informed of the current trend, most importantly, and look to the right and left. It's as though you're crossing the road. To the right is price action, what's the current price, what's the psychological level. To the left, you want to scroll your chart, sorry, to the left, and look into more significant areas in the past of where prices have respected a support or resistance zone. Okay, so you want to draw that. So now it'll give you a clearer picture of Euro USD, whereby you just need to actually wait and look into more play of price action, whether to go above this zone here, or just finding its way downwards and go under it to find a more bearish sort of momentum. That's just Euro USD at this moment of time. Okay, we'll go through the rest as well, and let's just look into what has actually happened with GBP USD. Now, GBP USD was quite a nice play of ABCD as well. As you can see, you've got a little bit of a parallel line here. That's your AB move, and as you drag that, let me just do that a little more accurate and drag that one right upwards. You could see that prices have actually found its area of resistance with that quadrilateral, we call it, which is symmetry. Okay, you've got a symmetry here, you've got an A to B, then you've got B to C, all the way down there. Okay, and to trade the ABCD pattern geometrically, we would like to convert that into a geometric pattern by combining A to D, and you can then look into this area, we call it the centroid point, for the trading area to take place. So most investors, traders are looking into that centroid area. Usually marks a significant support resistance, as you can see, a lot of price concentration as well. So that is what had happened for the GBP USD. So let's just look into the trend again as usual and zoom in a little bit. And as you can see, you've got still bullish sort of momentum as prices are above all three lines. The three lines, as you can see, is still giving you that hint of bullish momentum because it's pointing upwards. Okay, you've got a bit of a correction at this moment, heading downwards, but then let's just look into the play of candles as well, and you can see that you've got that correction to the downside, and then it went upwards again, then it found resistance here, around this area here, and then now it's on its way down. But as it comes downwards, the challenge would actually be the obstacle provided by the 50 moving average here. So you may find a potential or probability of a support area taking place here. Okay, because either one of this line, if it does find a support, then you've got a nice A, B, and then C, and then going to the upside. Okay, so here for GBP USD, let me just look into my notes here as well. We've got bank reports that are looking into areas of resistance and areas of bearishness and areas of support. So what they are looking at the moment, based on reports by Citibank especially, and also HSBC, their analysts and strategists have actually mirrored each other in a way whereby they both are actually mentioning the 1.2690 area. Okay, so that 1.2690 area is an area that most of the bank strategies especially, and also some of the other side, I've noticed that they actually pay a lot of attention to the 1.12690 area. It's always good, it's always nice to look into what areas the analysts as a whole are looking into, because especially the big boys through bank reports, this is actually quite a significant area. So 12690 area is a significant area here, which actually gives us more hint. What they're saying as well is that if at all prices are going under the 2690 area, then you've got more room to the downside. So they obviously, the big boys, the strategists in the banks, they're actually monitoring that area as a border. So that border actually indicates anything above that border, it is still a possibility or probability to the upside in terms of a trend for the GBP USD, and anything under or going even lower would then indicate bearishness. So that is a nice border to have, because that border at this moment of time coincidentally points us at the area close to the 100 moving average right here. Okay, and with that, anything under the 2690 as well could extend lower under the 200 moving average, which then means that if it goes under 2690 and under the 200 moving average there, then you're looking at more bearishness, which are possible based on the principles of what do you call that, the moving averages that we have talked about, because prices would be all under all three lines, and this is giving you bearish momentum. So here on the 2690 as well, in terms of price action and the psychological level, you need to monitor the 2700 area, because 90 really close to the 2700. So I would look into the 2700 psychological level in addition to the 2690, and look into whether prices have extended above 2700 or under 2700. Okay, so a little tweak on what the banks have actually mentioned, not really a tweak, but a bit of an addition based on the principles of psychological numbers as well would be nice to have. Okay, so let's look into what's going on in the 4-hour chart. You can see that prices for GBP USD still is looking at the potential there of bullishness, because you've got candles have extended really strongly based on what Teresa may have actually mentioned as well, and then you're looking at prices above all three lines. And let's look into the daily chart. That is just to confirm, to look into the strength of the bulls, and it is still showing above all three lines. So you've got a nice clear indication that there may actually be room to the upside, and I think the what do you call that? Most of the bank reports that I've actually seen, they're eyeing the 1.2950 area. So we can always apply our own sort of strategies based on geometric analysis and geometric patterns to look at that possibility to the upside. Now, if we based on the 4-hour chart, let's say, if we can actually look into any potential pattern hinting, or perhaps go on to lower time frames and look into what's going on there. As we can see, if it's based on the 5-minute chart, you can see that a rejection type candle or wick here have actually rejected the prices at on the dot of between the 50 and the 100 exponential moving average. So that could easily be a significant resistant area. If we actually pull that from the top all the way down to the wick here, you can see that it has met the minimum of 38.2. Now it's probably best for candles to go under the 2800. Now prices is trading for the GBP USD at the 1.2805, which is very close to 1.2800. So if at all you would like to wait until further candles come about, it's probably best for us to wait further, not only for further candles, but for further movement to the downside under the 1.2800 area, at least to the 1.2790 and below. Then you can make that clearer sort of predictive move to the downside. Okay, so once you have found more candles traveling downwards, then you can draw that easy ABCD type pattern, and once you've done that, you can draw that centroid area to give you an idea of where you could potentially trade to the downside based on the geometric pattern. So if at all we're looking at further downside with more candles traveling, let's say for example you've got more candles traveling through and you have then drawn an ABCD like that, you could easily have the B2C as such and convert this pattern, this ABCD bearish pattern, into a geometric type pattern. Okay, so you see it's a bit too soon, as we don't actually know the play of the candles, and it's really difficult or challenging to really know. So it's always good for us to look at the overall type picture of what's going on with markets at the moment, and to really respect levels, resistance levels, as well as support levels. So as we do that here, this itself, once we've converted the ABCD pattern into a geometric pattern, we can then get the area that we have projected the further move to the downside, as well as the central area, which is the trading area by investors. Okay, so investors, I would think, are more interested in trading at the right price, as well as the right area, which would be under the resistance area here would actually be ideal. So this centroid point may actually indicate a significant support resistance area as well. So as we go on to a slightly higher time frame, you can then see the play of that red line there. Let me just get rid here. We're looking at a very short time frame anyway. Just want to get rid of that line so we don't get confused with lines. Okay, so we've got that there, and as you can see, if we pull that through, you can see how it plays really well as well, the point, and here as well. Okay, so here is just based on 30 minutes and lower time frame, so you can actually look into short type movements as well. From 2797, if you're looking at lower move under the 2780 area, would actually be ideal to look into more room to the downside by this. Okay, so that is when we have actually gone on to the low time frame. So as you can see now on the live market itself, you can see that it's playing very well with a downward type move. You've got that strength of the candle, right? And you see that they found resistance right there. But you need prices to come under the centroid area. As we speak now, it is actually just showing the possibility of that happening, but we just need prices to respect the psychological level of 2780 as well, and look at what happens from there on. So the trading area usually in the central area needs to be tweaked based on principles of psychological numbers as well. So most investors and traders are looking at the area under the 2780 area if they're looking at the short possibility. So 2770 would be an ideal trading area looking, and most of the traders are actually looking at area that are probable for a support at the 2750 area. So 2750 is your possible support area. So most traders, they would actually then strategize and look into exit area, because this is when I say exit area, it's not a probable assurance that you should exit there or not. You should need to play, you should need to look into the play of price action based on psychological numbers. Very, very important, okay? Because this is where you would then measure your risk. Because as you can see, if prices were actually coming downwards, then based on the chart itself, you need to always look to the left, and to the left, you could then see that prices has actually appreciated in the past at this level here. Okay, so if you're traveling downwards, you need to look into the risk of prices bouncing upwards at this area here. Okay, so you as a trader would then know what you would actually do at that point there. If you are, let's say, for example, on a sell, in a sell trade, and then you've noticed that this area here at 2750s area is actually also, you know, hinting you or signaling you the threat of a rebound or a bounce up in prices. What would you then do as a trader? Okay, who's already into the trade. So this is basically it. It's important for you to understand that. So that's for you GBP USD in a very short, what do you call that, possible trading opportunities at this moment based on the 5-minute chart and based on a bearish ABCD type pattern. Okay, so there you go. We've got that going on, and so we see that through. I mean, you can always look into that potential there as we go on to the 1-hour chart. There may be a potential of A, B, C, D as well, okay, to the downside. So that may actually mirror that short-term move. But at this moment of time, it's clearest to be giving us a trading opportunity based on that pattern there. Because based on the 5-minute chart, it's just giving you that hint a little bit better than the rest of the time frames. Okay, so AUD USD, we're moving into the Euro USD, sorry, into the AUD USD at this moment of time. Before anything else, I want to also point out the risk of events as well. Now, we have got a couple of events. I think I've sent the sort of schedule of events to look out for. That was produced by one of the bank as well, or in a bank report. So that is on the Telegram GTI group. Now, the one that to look out for that would shake a little bit the market on Monday onwards, it's what would actually happen this coming Sunday, April the 23rd in Europe, which is the first round of the French presidential election. So the aftermath of that sort of event would then be reflected when market opens on Monday, and that would most probably be impacting the move of euro. So for those of you guys who are, you know, just got up in the morning and wondered why have a euro maybe moved or possibly moved or not, we're not sure, we're not saying it for sure, but there is a risk of market movements and offering some volatility to the market based on what's going on in France, okay, the presidential election. So that is April the 23rd, which is the coming Sunday. So that would then give us a little bit of hint of what may actually move the market for the euro, especially on Monday when market opens. So, and then after that, you're looking at April 27th and April 29th as well. For the month of April, 27th and 29th is what you need to look out for as well in terms of the economic calendar or any sort of meetings that may involve the big boys or high decision makers that usually move the market. Okay, so we're looking at AUD USD, but I just want to mention this one here. 27th of April, we are looking at the ECB Governing Council meeting, which does actually impact the market as well. You know, the policies will be discussed there in the meeting, and some things will be taken by the media and then reflected on the market. Then on April 29th, you've got the European Council as well, involving the European Council, but it's got to do with withdrawal of the United Kingdom from the European Union. So it's quite Brexit type, Brexit related. So this is quite big because it then is from the ECB, sorry, from the EC, the European Council. European Commission is also EC, and this is European Council, and it does actually revolve around the countries within European zone. So it would then impact both the euro as well as the GBP in this case. That is April the 29th. So it's best to look into that. And also, they're talking about union negotiator designated. It's also talking about what do you call that, 4 days after the meeting as well. You want to look into that, which is you know, after April 29th, which is May, in the first week of May as well, because we've got them. I think it's a bank holiday or across the world. I think it's May Day on May 1st. Then you are looking at the second round of French presidential election May 7th. So we do have some movement, expected movement. I know you guys are quite interested in knowing what sort of movement you know, could be expected, like what we experienced when Theresa May have actually spoken. So all these together, April 23rd, 27th, 29th, as well as May 7th, May actually look funny enough. It's in May, and then we're talking about May, and then Theresa May as well. So there may be a possibility of a good movement, some more movements expected due to all these type event risk. Okay, so now apart from that, let's look into AUD USD for now. And at a glance, we have had this move an AB, you know, AB here and then a CD here as well. So this is sort of a nice move as well here. We've got an ABCD, but what I'm looking at potentially is a sort of ABCD type pattern for a Z pattern. Okay, so I'll just draw that out and then explain to you what I mean. There may be a possibility here whereby you've got an ABCD type movement. Okay, if you box this one up, it's a perfect geometry type pattern here. Okay. And how did I come about in drawing that? Is very easy. I did the AB equals CD here. If I get rid of that, no. Let's see if I get rid of that. Okay, and I mirror that fall from there all the way down here. I get a Z-like pattern. This is a bearish Z-like pattern, which gives us a possibility. This is something that I've actually shared with you on Telegram GTI as well. This is on the 1 hour chart for AUD USD. So what I expect to happen is a move from C up to the D point at around this area here. And this area here is based on AB equals CD. But if you're using the Fibonacci, usually the area that it would then find resistance at this area would be about 50% of this. Okay, so 50% of B to C, and you will get that 50% there, which is not too bad, not too far, not too close to the area that we've initially drawn here at 75.43. That is 75.50. Okay, so you've got about 7 pips or so difference, which is not a very significant gap in between. So you can then draw that area there, and then it becomes a zone where prices potentially could go upwards and then find resistance and come back down. So that would then mark the completion of a Z-like pattern at the D point. So that's your A here, B here, C, and then the D area there. And usually based on the principles of Z pattern. The Z pattern, you can always go onto Google and type 5-0 pattern, and you can then find that quite a popular type pattern that is applicable to all markets, and it's most popular with stock traders as well. Okay, but now it's becoming more popular Forex traders. So here, for example, I've tweaked the pattern a little bit by combining it with the geometric pattern. So the use of geometric pattern has actually helped to increase the probability and lower the risk in trading the Z-like pattern. Okay, so here we're expecting the move to go, you know, towards the D area up here between 75.43 to 75.50 area. Okay, but usually in the move from C to D, it could mirror a ABCD type move. Okay, so it's no surprise if it has found a bit of support right there. So that may be a smaller ABCD type move, which then would look into possibility of reaching there once it finds support and gear upwards, if at all the trend is favoring to the upside. Okay, so here if I were to erase all drawing and zoom this one out, zoom in a little bit, let me just go there. Okay, so here, if at all you know this ABCD pattern here, and just concentrate on that move, there is a possibility of an ABCD move to the upside, as I've mentioned. So if at all I use a different color to mark that, or perhaps look into a dotted line. Okay, hope it's clear for you guys. Now here, for example, I could then mark A to B like that. Okay, and mirror that all the way up there. And as you can see, even an ABCD here would then still give me the potential within that zone right on the dot of 75.50. So that may actually hint a higher probability of that move happening to the upside. Okay, so here you can see that that ABCD is happening potentially. Okay, and with that you've got the bigger ABCD of a Z-like pattern also marking that potential area of where prices could aim for. Okay, potentially. But again, with that, there is also a risk of that not happening going above, and that could actually be challenged by the 100 moving average as well as the 200 moving average here. Okay, so as it actually goes upwards, you can always look at where has it actually found resistance in the past. Okay, so you can always look into, based on this price alone, you can always look at whether you've got any resistance area. You've got definitely some more support in this area, which is a good sign, showing a lot of support. Okay, but again, very close to the price now. Prices in the past in, oops, sorry about that. In 2016, December 2016, last year, has actually found a fall of price. So you can always draw a resistance zone there based on the highest body there and then highest wick, okay, which is also on that one there. So that's a good zone to actually mark, and we can always look at how prices have actually respected that zone as well very nicely. And this is for the AUD USD 4-hour chart, and as we go on to the right, we can then look into this zone here and that zone there. Okay, so we've got that happening. So once it goes under that zone of 75.13 and below, then we know that would then fail that pattern there possibly and head downwards much more. But as it actually increases, finds support at this area, which is a good support area, then you've got a higher possibility of prices reaching that area and then find resistance at that area right there. Okay, so that's your AUD USD. Now, AUD USD has been on the list of quite a number of investors, as you guys have actually noticed the pickup of prices for AUD USD, NZD USD, and various others involving AUD and USD. It's more mainly because of the carry trade opportunities that are offered to the market at this moment of time. So they are actually favoring, investors are favoring all the pairs that I mentioned earlier on, which is the NZD JPY, NZD USD, NZD CAD, and NZD CHF. So you could potentially look into the potential of an upside move reflected by bullish type pattern, okay, on these pairs, because when they do carry trading, they are actually buying the NZD versus the other pairs, and this is usually the normal play of a carry trade, is when you buy the currency with a higher interest rate. Okay, all right. So we've got AUD/USD right there, and then NZD USD as well. As you can see, you've got lots of support areas as well, and this is 1 hour chart. You've got a bit of a uncertainty due to candles trading in between all three lines, but as you go to the 4 hour chart, you can see that it found support and there are potential as well, but it's just not very clear at this stage for the 1 hour, 4 hour, and daily. But what if we go on to the shorter time frame and look into where there's some clarity of trend? You could see that you've got a downward move at this moment of time on it may be a correction, but this is quite a nice one here because you've got a concentration of candles here. Okay, as we when I say quite a nice one, quite a nice ABCD potential pattern, but we need to always pull the Fibonacci first from A to B to find the C at a minimum of 38.2, and it actually met 38.2 exactly on the dot right there, which is a very good sign. Okay, and here we've got most of the candles respected the 50 moving average and found resistance at the 50 moving average, which is also quite a nice sign of further downside preference by the market. And what we then do is we construct a potential ABCD pattern here. So this is for NZD USD on the 5-minute chart. So based on this strategy of geometric patterns, you can apply it in not only any instruments in the financial market, but also on any time frame. So here we are applying it on a very short time frame of 5-minute chart, and we're looking at a possibility of prices reaching downwards. Okay, this is due to the formation that I've drawn here, which is a bearish ABCD. Now, once we've got this a bearish ABCD, we can then mark the potential projection of price here, which actually hints the 0.6978 area, which is really close to the 6980 area. Okay, so usually investors would then look into the 6980, so 6990 area before it reaches the 80 area. Okay, so here we've got a bearish ABCD, so we need to then look into trading area or the centroid area. So once we pull the A to the D area, then we've got that nice point there where most traders are looking into trading at that area or below. If it is actually looking into the downside of bearishness, then we're going to look at prices to go under the centroid area. But again, looking to the right with price action of 0.7014, it's quite close to the upside of 20. And under 20 is 10, so it's probably best or ideal to look into 0.7010 as your trading area, and then looking at 0.6990 as your potential area above the psychological number. Okay, so this is looking like a potential or a potential trading opportunity here to the downside, especially when you've got a bearish ABCD type pattern. Here, it's actually found very nice resistance right there, but it would be best to measure your risk, be risk averse by tweaking the prices that you see on the centroid based on principles of psychological numbers as well. Now, this does also apply to your stop loss, your take profit, and everything else. Okay, to tweak it based on the psychological numbers. Okay, so we've got the NZD USD there. That's what we have there for the 5-minute chart. And when we go on to the 30-minute chart, let's say whether we could see a potential type pattern. Now here, when you look at the concentration of candles here, and then you've got concentration of candles here as well. So you've got a very strong sort of level or range of resistance here. And then as prices traveled down, it created a lower high as well. So you've got lower high coming downwards. Now, when you mirror that, you've got that a little higher area right there, but you've got lots of possibilities of other type patterns as well. Now, based on the 5-minute chart, we have seen you've got that potential there. That is looking like a potential more and more as prices travel to the downside much more under the 0.7, under 70. 20 and below, at least 70.10 or so, then will give you more hint to the downside based on the psychological numbers. As we go into trend confirmation, the thing is that it doesn't actually really look very promising in terms of trend or clarity not promising, but clarity of trend when we go to the 1 hour chart, because prices they're actually trading in between all three lines. As we go into 4 hour chart as well, this is also happening in the 4 hour chart. And when we go on the daily chart, we've got a little clearer to the downside based on the daily chart. I think for a bit of a question here. It's okay, Mr. Thiru, no problem. Enjoy your evening. I can always have the session, the recorded version, to be posted onto the GTI group. Don't worry about it. Okay. All right, no problem. That's fine. We've covered the Euro USD and the GU, so that's good. Okay, good, good. All right, so for the rest of you guys, this is basically what I'm looking at, a bit of clarity and none clarity on the longer time frame for the NZD USD, but there seems to be an opportunity, as you can see, and drawn on the NZD USD on the 5 minutes chart. Okay, so if we're looking into trading there, let's say it could potentially be a opportunity there. Close to, yeah, it's about 30 plus sort of pips right there, okay, on the potential. So we could always eye that movement and look into what's going on with the NZD USD. Okay, now for those who are wondering about the Euro JPY as well, I mean, I think I've got some questions on GTI group Telegram as well, looking into what's going on with the Euro JPY. As I've mentioned, I cluster all these 5 currencies, especially Euro USD, GBP USD, AUD USD, NZD USD, and Euro JPY as the cluster of 5. So these cluster of 5 usually move in the same direction. So if I see that the Euro USD, GBP USD, and most others has got the potential to the upside, the NZD USD, for example, we were looking at the 5 minutes, but as we go into the hour 1, 4 hour, daily, and also weekly, we find that it's still looking like the downside type biasness. But again, if you see there's a cluster of 5, majority of the pair has got potential to the upside. Okay, so as we look into Euro JPY, on the 1 hour chart, it's quite clear the angle itself and the way the candles are moving above all 3 lines. They're actually hinting a very strong upward type or upside trend. But the thing is that we are actually sort of trapped in between clarity at the moment of trend at the 4 hour chart, because candles are in between all 3 lines, you see. So if we go onto the daily chart, then again it's hinting to the downside. Longer time frame, let's just see what's going on. Longer time frame, like the monthly as well as the weekly, it's just giving us more potential to the downside. Now here, if we base on the weekly chart, there's quite a nice ABCD potential pattern here, mainly because it found resistance, or really close to the 50 moving 100 moving average here as well. So you got an A, a B, a C, and then potential for the downside. Okay, but let's just look into low time frame at the moment. The Euro JPY, as you can see, found a very good support right here. Okay, this is based on the 5 minute chart. As you pull your Fibonacci all the way, this very steep move upwards here has found Fibonacci not really, has found the C point not really touching any one of this Fibonacci, but has actually touched the 100 moving average right on the dot. So it's in between 38.2 and 50%. Usually as a conservative trader, it will be even better if the C point actually touched the one of the EMAs, as well as touch one of the ratios for the Fibonacci. Then you've got a higher sort of probability. But this does not mean that this pattern would fail or anything like that. It's always good to monitor the price and the way the candles are moving. Now here it's just hinting us a lot of strength to the upside based on the 5 minutes chart. Okay, so you can easily draw again an ABC type pattern to give you an estimate or a projection as to where prices could go up to. Okay, so as you do that, you can then see that there's a potential for prices. If at all the trend is strong to the upside, as of now, based on the 5 minute chart, then Euro JPY could see itself at the 117, or aiming at the 117.93 area. You've also got the 117.80 area to be a potential risk area, which would make the pattern maybe fail potentially, or the 118.00 area. So you need to watch out for these 2 levels, 8.00, which is a psychological level, as well as the 117.80 area. Okay, so these are areas to watch out for as potential risk zone as well. Okay, but from the movement of the candle in the 5-minute chart itself for Euro JPY, is just showing lots of movement to the upside due to the candle strength and the strength of the buyers participating in the trade. Okay, and it's the same going on for the 15 minutes chart. So we've got some movement. The steepness of the trend as well is just showing a lot of room potentially to the upside. As it moves upside and mark that area there, as you look left, you can see that you've got a potential really big fall happening at that area as well, or fall previously have actually happened at that area there. Now here you've got another sort of peak area there too. So we always want to look to the left and look at the behavior of candles. Why is it actually contemplating at that area? You've got that area there marked by this area here. You've got a rejection candle there as well, and you've got that zone. So based on that one there, you draw a zone. You can then look left again, and you can see that quite a number of candles or prices have actually respected that zone very nicely. So this is another zone here. So it's moved under that zone, giving you the hint that it may actually find a bit of resistance. Only if at all you've got this strength of candle to pierce through, or the next candle to pierce through, then you've got a higher probability of prices reaching that 117.90 area. Okay, all right. So that's for Euro JPY, and let's look into. Just got more strength, but as I've mentioned earlier on, the longer time frames from 1 hour onwards is just hinting more uncertainty. So it's best at this moment of time for Euro JPY to look into the lower time frame as opposed to the higher time frame. You need for prices to marinate first properly in order to give you that taste of trend. At this moment of time, it's not yet. The taste of trend is not clear for traders for Euro JPY on a longer time frame, but you could then look into shorter term type trade based on a clearer trend on the shorter time frame, like the 5 minutes, 15 minutes or so for the Euro JPY. Okay, all right. I think we've got some questions coming up. Hi there, Luca Majaje. Yes, we do have a channel, a GTI channel. Perhaps what you can then do is to email me at kenny.simon, okay, and I shall then send you a link, and that link will then give you access to our Telegram group. It's called the GTI Telegram group, where we share lots of trade ideas and share about the market outlook amongst our members there. Okay, so I will give you my email address here, kenny.simon. Okay, I'm just giving you your. Okay, there you go. Got my my email address. I've got two email addresses because I'm using the Blackwell platform as my educational platform. So I've got kenny.simon@blackwelltrader.com. That's one email, and then I've got kenny at fxgeometry.com as well. Okay, so you can reach me in both email addresses. Just send me a quick email requesting the Telegram group link, and I'll be happy to send that back to you or reply that back to you with that link, Luca. Okay, good. All right, let's just see. We've got any more questions at all at the moment for Euro JPY? That's my take on Euro JPY, on focusing on shorter trades at this moment of time as opposed to longer trades, as it's not that clear at this moment of time. All right, now USD CHF. If you're looking at more the upside on this cluster or group of 5 pairs, then USD CHF and USD CAD would be opposite that. So it would actually move opposite to that. So you've got USD CAD, let's say, to the upside, but then you've got USD CAD to the downside. But let's look into the USD CHF of what potentially could actually happen. You can see that from the daily chart itself, it looks like it's favoring the downward type move, and it's trying to go under the 3 lines. As we go onto the 4-hour chart, you see that the prices have actually gone much lower. Okay, so 1 hour is much lower, of course, and as we go on to the lower time frame, you can see that the prices are finding more resistance. Okay, and it's favoring the downside type move. Okay, so here we're just looking at the week. On the weekly and monthly, we can actually forget at that moment of time because it's just not hinting us clarity of trend. Candles are not moving under, so we can always stick with the 4-hour chart, 1-hour chart, to look into potential to the downside and a potential A, B, C. Even though it has not really touched the one-hour line, it's showing quite nice resistance there. You can always measure that further with how the Fibonacci is a minimum on the dot 38.2 for the USD CHF as well. So this is something possible on the 1-hour chart. As you go into the 5-minute chart, you can see that it found resistance in between the lines as well. So here it's offering some sort of risk because clarity not too bad, but the levels of where the C point have actually reached, it's giving us some potential trade, but I wouldn't say a very high sort of probability or low risk. It may actually involve some sort of risk as well, because I would like to be I am a conservative trader, meaning that I pay a lot of attention on how the C point have actually respected or not the 3 lines. It may still go well for this one here, but looking at the way the candles have actually moved itself, it's just giving loads of resistance at this area here. So if we have taken this one here, that's my A to B, and then down there you could see that that move there is actually already happening. It's finding a bit of there's some previous support here, and then now prices is actually thinking at the moment, and it's thinking exactly, I mean, it's really close to the 99.50 area as well. So it's not giving us you know, that exact clarity at this moment of time for the USD CHF. So I would like to, you know, not avoid it, but give it some time for prices to marinate and find a better sort of structure of pattern, perhaps a bit later compared to the other pairs that we have talked about. Okay, USD CAD on the 4-hour chart is giving us a very nice clear angle to the upside. So we have got CAD weakness, and the CAD weakness is due to oil prices as well, and we are looking at the strength of the dollar compared to the CAD, and that's the same for the 1-hour chart and also the daily chart. So it's giving us lots of nice support area kicking upwards. So you can always treat that as an A, a B, and then a C down there, and then a potential upwards there move. That's on the daily chart. For the 4-hour chart, we are looking at no exact C point that actually bounce up from a either one of the moving averages, but then we're looking at the strength of the trend is just showing a potential upward move possible. But always look to your right and left. To the right, 1.3491 is really close to the 13500 area. Now that 3500 is a psychological level to look at potential resistance area as well. But as you look to the left, you can see that you've got price drop here. So what you can then do is draw a resistance zone here based on the highest body here, highest wick there, and as we travel further, you may have another zone there of a price drop right there. So you have got now a zone that you need to look out for prices to go above that zone, and then you've got a second challenge. But once it's actually gone through or pierced through both challenges, both zones here, the upper one and the lower one, and gone above all 4 red lines and horizontal red lines, then you've got a higher probability of looking at the potential upside or bullishness, okay, for the USD CAD. Now here, as we go into the daily chart, it's just that as prices are moving upwards and as you look to your left, you can then notice that you've got resistance here, loads of resistance at this zone here. So you want to always watch out for this area that has got loads of resistance, and it mirrors sorry about that, it mirrors you know, all these ones in the past or previously as well. So I'm just wanting to look at whether I can find the potential. So there you go. You've got more fall of prices. So that's a very, very significant fall, and that actually is at that area there as well. So we need to respect that area and really pay attention to this area here that could potentially be another resistant type zone, because traders would then look into this and look at the two candles currently here as well to be really strong, and then would like to look into the upside move. It's all well and good, but then it's always good for us to measure our risk and understand what risk is at play at the moment for the current trade that we are looking at. Now here you've got these two zones, and these are the risk area of a resistance happening. So you would need for prices to go under 3,480 and below to then consider the downside, and then 3,510 and above to look into the upside potential. Okay, so at this stage, too early to decide on what exactly to do or which direction to trade in, mainly due to how prices are trapped in between these two red lines, and then you've got a further challenge to the upside on these two prices as well. Okay, so this is it for the USD/CAD. We've covered most of the 7 favorite pairs that I look at every day. So then we go a little bit onto gold and look into what's going on with gold, and we shall then wrap up this session and open it up for questions. Okay, so here we have got the gold versus the dollar. The 1-hour chart is just trapped in between all 3 lines, which just hints us uncertainty. So it's not a time, I mean, for me, especially as a trader, to actually look into trading opportunities or entering or anything like that, because we need to measure the risk based on the price. On the 1278, it's just to close on the $2 up of, sorry, 2 ounce up of 80, which is 1280, another psychological sort of level. Okay, but here, as we look to the left, we do find that thread here as well. Okay, we've got a rejection candle. We can always base on this area here, lowest body, sorry, highest body, and then highest wick, and you can see that what do you call that level, that zone itself is just trapping all these prices here that has found support. So has this resistance here in the past has become support? We don't actually know that until prices go above 1279 here, up and above, until it goes above all 3 lines. Then we can say that. If not, it might also have got a potential to come under that zone. So let's just look into this zone and see what's going on. We'll go to the 4-hour chart. You could see that that zone there may actually mirror what have actually followed here in the past. So we're going to just look at what's the price play, how candles have actually respected that these areas here or close to this area, and you can see that you've got a lot of fall have actually happened from there, because they found resistance at all 3 of the moving averages as well. So you've got a significant fall, a very big fall right there at that area there, close to that area there. So we need to respect that area. We've got a resistance found as well previously at that area. We've got prices have actually shot up through that, and a significant rise in price of gold as well, and that is last year in June. Okay, and then we've got that same area that we've drawn, or that support resistance zone that we've drawn as well, has got a nice concentration of prices, whether it's support or resistance right there. You've got price fall there as well. Then you've got, there you go, you've got all these price falls, and it actually just mirror very nicely of what we've actually drawn earlier on. So this is significant resistance area, and as we go on, let's see whether we could see anything clearer. We've got more there, and again we've got support right there, support. So this is quite a nicely drawn level, but a level to watch out for all the gold traders out there. Okay, so it is a level for you to see whether prices above 1280 or under 1277 and under to show you the downward type movement. If not, then if it finds support at this area and gone above the 1280, then you've got more potential to the upside for gold. Okay, so you need to watch out for this area. Now you've just got candles and prices of gold just playing in within this zone. It's not actually, you've got all these little bodies and they're concentrated in that zone. So you need that zone to be, you need a breakout of that zone. But if it's a breakout to the downside, let's say the breakout to the upside does not actually happen, then that risk will then be transferred into the obstacles offered by the three lines of the EMAs, as you can see. So if it is coming downwards, then you've got this one here, we've got this one here, 200, and then 200, 150 exponential moving average right there. Okay. So it's looking like that support is happening right there. But if I move on to the daily chart, and I think I've shared with you guys on an overall picture based on the daily chart for the gold, then you could see that this is what I see, that potential ABCD right there, yeah. And this has been drawn and shared on the GTI group in Telegram as well. So here, for example, you have got ABCD right there. So the ABCD is projecting a potential move to the upside here. But now prices is trapped in between the zone of 1279, 1277. So we need prices to go above. Okay, go above. But it's probably better to look into prices going above that area right there. So you can always draw another zone right there here. Okay, so even though if it gone pierced through there, you still got a bit of you still got some space significant to the upside up to the 1335 and 45 area right there. Now that area there mirrors that rejection candle right there, which is quite a good thing. Okay, so then if we see this one here as an ABCD bullish pattern to the upside, another potential pattern would actually be a W-like pattern. So if I pull let's say I pick one of this peak here. Okay, what I would like to see is once I pick the X, this will be my X point to my A point, because this is your A, your B, your C, your D of your ABCD pattern. But if I pull something at the very top from any one of these peaks here, I want to look at the X to A and where my C have actually met. My C at this point has not really touched any one of these yellow horizontal line which marks the Fibonacci ratios. So what I can then do, if I move it upwards, I still don't see that touch. But if I move downwards to this zone here, I can see it's closest to the 61.8. So what if I move here? If I move here, this one here gives me a nice ratio of 61.8 if I pick this peak here. Okay, so I will then choose to pick this peak area here. Okay, this high, not this high, not this high, mainly because of the Fibonacci where the C would actually meet. So here would be quite a nice one here. So I'll choose this one here. Okay, so if I get rid of that, if I get rid of that one there and I use that, okay, all the way down here and pick that instead. So that's the one that we've drawn, right? So okay, so what I'll do is I'll pull now from there X to A, and I'll mark the 78.6 area, okay, and also the 61.8 there. Okay, right now I'll do the same thing. Same thing, meaning from X, let's see, from X now to C, and I do the same. I mark the 61.8. I also mark the 78.6 up there. Okay, 78.6% and the 61.8, and I get rid of that. Then you can see that you've got all these concentration of lines. Just pick the one that are closest to each other as a cluster of lines, and I'll get rid of that one, let's say. Okay, I wouldn't get rid of that one because that marks my AB equals CD area. Okay, but if I pull this one A to B, I can see that my C points at 50%, correct? So what I'll do then, I'll pull my B to C and look for 200%, and you can see that the 200%, okay, 200% is right there on the dot there as well. So I don't need to draw a second line. And you can see that I'll just mark this area here, okay, because all these lines just end up really close to each other. So this is a very significant zone that prices could turn around for a W-like pattern. So this is probably what it's doing now, but I would like to mark, this is one of the 61.8% line. So if prices go under the 1277 and go under and reaches to 1261 and then go under, then you would find it coming under and finding the resistance support at this area here where the 3 moving averages are. So at this stage, I would say that the possibility or the probability of reaching there, it's only higher once prices have gone out of this blue box and above the blue box, then it could actually be a potential probability or potential higher probability to go and reach this area at 1335. At this stage, I would say that it may be a correction or not. We don't know that just yet of what exactly prices or the market would do, but it's best for us to look at what prices would do in reaction to this blue zone, whether it goes under and find resistance at the 1261 area and go past and go through it. If it doesn't and finds support earlier and goes through this zone above the 1297, then you've got more room to consider in this area, in it reaching the 1335.45. Okay, so that's your goal, guys. So we have covered all these 7 pairs plus gold. Okay, now I'll open the session for questions before we wrap up the session today. So any questions at all about either the ones that we've discussed or the ones that you're trading at this moment of time, or about the market in general? Any questions at all before we end the sessions today, guys? Questions? No questions? Questions on the ones that you're trading, perhaps? No questions at all? All right. I think somebody has to be bold and path the way into questions, and the rest will follow. Any questions at all? You guys are quite clear. You guys are quite happy with your current trades at this moment of time? Yeah. All right. Looks like there are no questions at this moment of time. If no questions, that would be perfectly okay. We can still meet up in the next session on Mondays and Thursdays next week. And so no questions. I don't see any sign of any questions coming or popping up. So in that case, I would like to wrap up this session. Hoping for you guys to have a very good pipping week. Okay, or have had a good pipping week and good pipping week ahead. So, all right, so we'll just wrap up here in this session. I would like to thank you guys for joining me in this webinar. For the guys who are joining us, I could see some new names as well. If you join us for the first time, welcome, and you guys are welcome to join me every Mondays and Thursdays the same time on the live webinars, and we are thinking of increasing the number of webinars live as well. So we probably will be starting webinars every day via FX Geometry as well as Pepper Global. Okay, so this would be a good chance for us to guide you through your trades and you know, for you to monitor your trades closely and with our help as mentors for your trades as well. Okay, so that's it, guys. So I would like to wish you guys all the very best. Thank you for joining me today in the live market outlook webinar on the 20th of April. So we'll see you guys again next week. I'd like to wish you guys a very good evening and a good week ahead of you guys. All right, thank you very much. Take care. Bye-bye.